Nice to see everybody in here today once again. Makes me happy when I see you guys coming back for more. Shogun, good morning. Tony, Thala. It is like a red carpet gala event going on here. Look at you guys. Hope everybody's doing well. Hope everybody's excited to learn. Guys, we're going to try something new today. We're going to talk a lot about patterns and rules, and we're going to talk about advantages and all that good stuff. And then, give me just 1 second. Sorry. All right. Good morning, Daniel. Guys, we're going to talk all sorts of goodness about routines. We're gonna start day one. So we're going on the assumption, guys, that you have just showed up. Um, you woke up this morning and you said, you know what? I want to download a demo for Nexgen. Um, Give me just 1 second, guys. I'm sorry. I'm trying to help somebody get into the room. I want everybody to be able to get into the room. And sometimes in the beginning, it gets a little confusing, I think. People kind of get lost on Discord in the very beginning. I know I did. It was a little silly. You get through, but then once you get those systems and routines down, guys, everything gets easier. It always does. So we're going to do that. We're going to focus a lot on systems and routines this morning. We're going to focus on gearing up for the day. That's how we're going to start. If you don't have a morning routine yet, not everybody's a routine kind of person. Guys, I'm a wake up, I walk to the coffee pot, I start a cup of coffee, I walk back, I turn on my computer, I go back, I grab that cup of coffee, put a splash of milk in it. Like I am very much into patterns, whether it's in the market or whether it's in my life. So I think that's one of the reasons this appeals to me so much. So once I've got my coffee, I sit down at my desk. The first thing that I do each and every morning is I go to forexfactory.com. Before really I do anything, I take that quick glance. Hey, good morning, Ziba. And I want to make sure that there's not news, that there's not something going on that's going to make the market move erratically. And I don't worry about what Jolt's jobs opening means. I didn't even know that Jolt's was hiring, to be honest with you. But they give a list, and it's high impact. It's got that red box next to it, which means, honestly, guys, the S&P could go absolutely nuts. It can spike 20 or 30 points one direction or the other. Um, a lot of times during these spikes, the patterns work, but it moves too fast to catch it, and there's potential slippage. You may be in a trade that is absolutely rocking in the direction, doing everything it's supposed to, and then some emotional response has it do a 180 and knocks you out. So every morning, check your news, guys. Make sure. So today, Wednesday, April, are we Tuesday? Tuesday, 10 a.m., Jolt's job openings, right? High impact. Write it down on a piece of paper. Guys, use Siri. Say, hey, Siri, remind me at 9:58 to get out, to go walk the dog, to refill my water, to tell Mark what a wonderful teacher he is. Something. Anything other than jumping in front of that, right? And then, guys, the second half of my routine every morning, as we make this transition to NinjaTrader 8, and everybody's making the transition. You'll notice that my classroom is being taught in 8 more. You want to go through this stability. John put this together for everybody, um, and it talks about a lot of things. What makes it work? How it works well. I'm going to walk you through my routine. I'm going to get you through what I do each and every morning as I come in for stability. And it all starts in my documents folder, NinjaTrader 8. You should be doing this every morning, guys. So I just wanted to share this with you. I'm going to go to Documents, NinjaTrader 8. I'm going to double click on my database. And the first thing I do, and I can't do this because it's already open, is I'm going to delete cache and tick. I'm going to give myself fresh data. And this is all in the video provided, but I wanted to show it to you because sometimes that visual helps. The next thing that I do is I go to my temporary folder and I delete everything inside of this temporary folder. All of this gets done before I open NinjaTrader 8. And then finally I'll go to my workspaces, and usually there's a recovery folder in here. I don't need it because I just opened up, but if there's a recovery folder, well then that goes away as well. That's the first thing I do each and every morning is I clear that out. I also open up my Norton Utilities. Let's see where that's going to open. If you're using Norton Utilities, that's great. If you're not using Norton Utilities, that's okay. But every morning I'm going to go through and I'm going to check for issues. I'm going to go to speed up and I'm going to reclaim my memory, do a little defragmentation, and then I'm going to go and I'm going to make sure that I'm running optimal gaming, guys. NinjaTrader 8 uses quite a few resources, so every morning you're clearing things up, giving yourself the best chance, and looking at it. And there's pictures of each and everything that I just talked about here. Getting rid of OneDrive is a really big deal. Make sure that that goes away. Edit your power plan, guys. Make sure that you're optimal. Make sure that you're high performance. Computers will default to the slowest, lowest, darkest settings to keep, I guess, computer emissions down. Make sure that it doesn't sleep. Make sure that your computer doesn't hibernate. Sync your Windows clock. Doing all these little things are going to help you get exactly where you want to be. So if you have questions about that, you can always ask. But if you start making this your routine each and every morning, what you're going to find is NinjaTrader 8 is going to be smoother and you're going to have a lot more success with it. And really it's just going to kind of make you feel better about the day going into it. Is everybody comfortable with that? Is everybody on 8 now? Do we still have some 7 users? And guys, if you're on 7, it's okay. I'm a big fan of 7, and every now and then I still use it, but I'm trying to make that 100% switch to 8. If you're not comfortable with that switch yet, it's okay. You don't have to make it. 7 is still working. 7 is still doing great things for you. And Dave, I see that you got your picture in there. Great. 7 is 7. On 7 and 8 until you get your new computer. No worries. Yeah, John and I were playing kids a month before Christmas with the Sears catalog the other day, looking at computers going, okay, let's get one of these. So, good stuff. And then, guys, everything that I talk about, we're going to slow roll into the day today, guys, because I know I have a lot of new people. I want to cover the 2 most important things that you can do. And everyone's like, well, the most important thing should be make money, right? No, the most important thing is understand the path and understand the process. So if you're one of my new people and you're like, man, I can't wait to be a day trader. I can't wait to ditch my job and make money and do all this stuff. Well, there is a definite path, guys. Shogun, I'll never tell you what to do because I'm not that bossy. But I'll tell you a story about me. When I see high impact news, at least 5 to 10 minutes before, that's when I make an excuse to go refill my water or grab a cup of coffee. It's just, I don't need to trade. I love volatility, guys. And as a Nexgen user, volatility is your friend. When that market's going up and down and crazy, we have opportunities all the time. But there's a point where it's almost too fast. Hey, good morning, Jose. Nice to see you. So guys, I'm putting this in the room. Step-by-step path to becoming a confident trader ASAP. You can't sidestep this. You can't circumvent it. This is how you're going to get to where you want to be. Post your trades in class, guys. Everything that you do, show me in class. Every time you take a picture, post it in class. Every time you have a chart read that you're not sure about, post it in class. For 15 hours every week, guys, in this live classroom, my sole purpose is to make sure that you're comfortable with what you're seeing. Jose, if you right click, actually, nope, sorry. Take a drawing tool. So for example, Jose, an ellipse. Double click on that ellipse. And under general, it says attach to. Make sure that you choose all charts. Cool. And guys, this is exactly what this classroom is for. There's no questions that are off limits, none at all. So if you're curious about anything, post that question. We'll get it for you. But I really do want to talk about the path for a second, guys. You're going to post your trades in class, and then you're going to put those trades into a spreadsheet. We're going to do that this morning before we ever talk about rules. I want you to be comfortable with it, and I want to encourage you to take advantage of having somebody live 15 hours every week. The conversations happen between you and I, or you and me actually. Let me pull out my English lit. Through the classroom, through your pictures. And the more information you give me on a picture, the easier it becomes to help you out. I promise I don't ever do anything on accident. I kind of think through everything. The second thing is posting in your spreadsheet, guys, making sure that you're taking pictures, make sure that you are posting them in the spreadsheet. Everybody has this spreadsheet. It's been given to you already. But if for some reason you can't find it or you don't feel like searching for it, I'm going to give you my spreadsheet, guys. My spreadsheet has over 130 pictures of what you should be looking at for your first couple weeks. So I just posted it in the room. Please steal it, download it, or you can click and drag it over to your desktop and have a copy of that. So here's your path, and this is exactly what we do in class every day, Monday through Friday, 15 hours a week, live. Is you're going to learn the trigger line and the rules for when it's okay to trade. My job is to teach you these rules. My job is to help you understand what they look like, to get you to a point through your interaction with me and my education path so that you recognize these, so that they become easy for you. You simplify and make them easy by staying focused on the best of the best. You guys will simulate your trades daily. Post those pictures in class until you're sure you have the correct rules, and try not to practice the wrong trades. Remember that practicing the wrong trades doesn't mean that you took a loser. It means that you're just saying, to hell with it, I'm on simulator. I'm going to have fun and see how high I can make that number. Because when you go live, it typically makes that number very low. You have the ability to go after class and replay data and use market replay. Double, triple your repetitions. Get that knowledge base in faster. Go back and fix your mistakes every day and keep taking pictures and repeat that process until you're taking the correct trades. So I want you posting in the room as much as possible. And guys, I pulled up TechSmith Capture today. Everybody should have this on their computer. If you don't have TechSmith Capture on your computer, raise your hand for me. I want to make sure. All you have to do is search TechSmith. Some of you have Snagit. You've already upgraded. But here's the link to TechSmith, guys. This is your window to the portal. This is your window to me, giving me each and everything that you need so that you can get that feedback. And that TechSmith Capture is the easiest system you'll ever use. It's this yellow icon down here in the toolbar, and it's one giant big red button that says Capture. You're going to click that Capture button, and it's going to allow you to take a picture of your screens. What I need you to do as a brand new user is start in the upper left-hand corner and left-click on your mouse and drag it all the way down to the right. I want to see your timestamps and I want to see your prices. Because what it does, it allows me to line up to make sure that you guys are showing me where you're getting in and where you're getting out. Once I release my mouse, it's going to give me this option right here. I've got the camera. I can capture the image. I've got a video camera. I actually love the video camera, guys. If you start videoing your trades, there's a lot to learn. But I'm going to click the capture an image, and it's going to give me my image preview. Feel free to follow along with me. Guys, and all this is this is how you and I have a conversation. There's going to be tools up at the top. You have an arrow, a shape, a highlight, and a call out. If you feel like changing colors, get a little creative, no problem. But I can use this arrow to identify things that I want to present in the classroom. I can use the shape, maybe I can change the color, and I can use this call out. And this call out's how you and I are going to have a conversation. And I want you to write your rules on the chart. I don't want you to put rule 1, 2, 3. Write out the words. What got you in? And what you're doing, and everyone thinks that I'm just giving them tasks, right? Well, Mark knew that there was odds favorable momentum. What you're doing is every time you write out what the rule is on your chart, you're reinforcing what it is that you're looking for. You're reinforcing whether or not that rule is met. You are creating recognition and awareness of what's providing you these advantages every time you do it. Once you have the picture, I can click copy down here in the bottom right. And when I copy, I can come in and paste it directly into this chat box. And guys, now you have a picture of my picture. This is how we have the conversation. I like to make it a little more permanent. So I'm going to click upload in the bottom right. And what it's going to do is it's going to push this picture into the screencast cloud, which is going to allow me to share it not only with the classroom, but it's also going to let me put it into the spreadsheet. So I'm going to click copy from the link provided. I can put it directly into the room. And guys, I love it when you use the screencast link in the room. It makes it easier on me. And then I'm going to come to my spreadsheet, and every time I take a trade, I'm going to come to this first tab of my spreadsheet, and if I just paste the screencast address in, it's great. I've got it saved forever. I can go back and revisit. But I want you in the habit of identifying what happened in the trade. So I'm going to take the screencast link, and I'm going to click on Insert, and I'm going to turn that link into a hyperlink, which means that I'm going to be able to describe what's going on in the picture. I'll click Paste, and it gives me that web address the same way as if you were going to Google or Amazon. And then under Text to Display, I'll put high probability trend trade winner, rules met. Once I click OK, now I have that link in my spreadsheet that I can follow each and every day. So everything that I do on Monday, Tuesday morning, I'm going to open up this spreadsheet. I'm going to take a look at it. I'm going to reinforce the good stuff that I did. I'm going to recognize the mistakes that I made, and I can kind of focus that morning to not repeat them. You'll begin to recognize patterns in the market that make you successful. But guys, the most important thing that this spreadsheet does for you, in my opinion, is it helps you recognize patterns in yourself. If you have 10 pictures on Monday that say into a termination condition or fought trend, what you're doing is you're identifying these challenges that you're creating for yourself by not following rules. And when you see it over and over, into a termination condition, lost, fought the trend, lost, you're going to begin to correct that behavior and really start focusing on following the rules. And that's the first page of the spreadsheet. The second page of the spreadsheet, this is my personal trade setups look. These are rules met 100%, what it's going to take to get me into the market. Your job is to fill out your own version of this. I gave you mine, but you can fill out your own version. If you want to start fresh, here's a link to the trade tracking sheet. It'll get you your own copy. But the idea is that you fill up with every high probability trend trade, with every rules met trade. You're going to begin to put pictures into your spreadsheet so that you can come back and study them. Guys, I put this spreadsheet in the room about 10 times a day, I think. As a brand new user, you have 130 plus examples of rules-based entries for you to study, for you to commit to memory, for you to become comfortable with. Make sure you're taking advantage of it. And then you'll have a tab for you'll begin your catalog. But that's your spreadsheet. And that spreadsheet, that ability to take pictures, is what's going to get you exactly where you need to be. That's your path, guys. once again. Are there any questions about using Capture software? Are there any questions about posting in the room, about populating a spreadsheet? I know you're going to find this unbelievable, but from the Nexgen education page, if you go to the software user guide, there's an entire section dedicated to walking you through the process of what we just talked about. And I'm going to give that to you in the room. Are we good? Can everybody hear me? Quiet. Am I lecturing this morning? Guys, I want you to have the tools to be successful. That's my goal each and every day. All good? Great. So if you've never posted a picture with me in class, guys, this is your opportunity, right? Take a picture, post it in class. Go, hey, Mark, here's my first picture. You overslept. That's a good thing every now and then, Gary. And then everything that I talk about, guys, comes right here from the tutorial section, from the education page. There are no secrets with Nexgen. That's a good thing, Gary. I mean, there are zero secrets with Nexgen, guys. We give you anything and everything possible. I always liken Nexgen, we're going to give you the world's greatest elliptical. If you don't use that elliptical, you're probably not going to get results. So here is your how-to for each and everything. And what we're going to focus on in the very beginning is one trade. It's going to be one trade, 3 rules, going to keep it simple, right? Going to keep it as basic as we possibly can. Hey, good morning, George. Simplicity is your friend in the beginning. As you grow with the software, so does your ability to expand outside of this basic concept. But in the beginning, we're going to focus on a high probability trend trade, guys. And a high probability trade means that every indicator on every chart agrees with the trade. And your rules for this high probability trend trade are going to create advantages. And those advantages are what's going to get you into the market. And a high probability trend trade creates a trade that has 3 parts to it. A trade equals momentum, a clear path, and an entry area. There's only 3 rules. Strong triggers providing momentum, no termination conditions providing a clear path, and then using a limit order at areas at those large triggers providing an entry area. And these 3 rules happen on only 2 charts. Once again, simplicity. The first chart that you're going to look at every time is going to be that 13.2. You're going to look at this larger, slower chart. It's like a broad stroke of a brush, giving you the overall temperature of the market. You'll use the most current bar, and you'll be able to recognize the trend of the market. If the background is green, the trend is up. If the background is red, the trend is down. And that's really going to keep you on the right side of things in the beginning, right? Rule number 1 happens on the 13.2. It talks about strong triggers, making sure that you have the absolute best of the best look, the momentum to support the trade. Rule number 2 happens on the 13.2 chart, making sure that there's nothing in your way, that you're not reaching any of those key areas that may reverse the market. As when these 2 advantages are in place, we'll go to a 5-1 chart, and this is where you're going to refine. George, I'll show you. This is how you're going to refine the information that was given you on the 13.2. You're going to take that broad stroke of the brush and you're going to be able to whittle it down all the way to the area where the market is likely to continue. And this is where your 3rd and final rule takes place, using a limit order to buy or sell a pullback at an area inside of favorable large triggers. By using this scenario, the overall look, and then dropping it down to a smaller, faster chart, it's going to allow you to reduce risk. It's also going to allow you to maximize your profit potential. So it's really that refinement process. Let me show you the refinement picture. Taking 1 bar on the 13.2, because it happens in 15 to 30 bars on the smaller, faster chart, you'll be able to take this broad stroke of the brush and take it all the way down to finding your potential entry point to give you that highest chance of success. And then you're going to use a limit order. That's how specific we're going to be getting into it. So I've given you the picture of the 2 charts. Guys, I'm going to give you a picture. Put these into your spreadsheet. Here's the 3 rules that get you into the trade. Here's the 3 advantages that you're going to have. And those three rules are discussed and visualized right here in the tutorial section. And then, George, of course, what I try to do every time you guys ask a question, I'm not only going to show you and help you out in the classroom, but I'm also going to show you where to find that information just in case you forget. So, George, trade entry and management techniques is going to be what helps you with those limit orders. But I'll show you how to do it real quick. If I'm looking at NinjaTrader 8 or NinjaTrader 7, either one, and I right click above the current price, it's going to allow me to sell limit 1. Excuse me, I'm losing my voice. And now I have a limit order placed right here. If the market comes up and hits that limit order, I'll be in a short position. If I am below the current price, it'll give me the option to buy, meaning that I want the market to go up. And if I click buy limit 1, there's that potential limit order. If the market comes down and hits it, I'll be in a long position looking for the market to go up. If I need to move the limit order to different points of the window of opportunity, I can click that line, put it anywhere I want, but the original order stays in place until I click that second time. So if you're brand new with NinjaTrader, guys, go ahead and practice a little bit. Practice making sure that you have limit orders in place, that you're comfortable moving them. Make sure that you have ATM strategies in place, that you have stops and targets every time you take a trade. And guys, most importantly, and I'm going to say this, excuse me, because I see the picture that just got posted. Guys, every time you take a trade, I know it feels like work, right? I want to make $1 million a year, but gosh, it's a lot of work. Matt, we'll talk about that when we talk about management. Can we hit that after entries? If I promise to cover it today, we good? Cool. Guys, here's how to annotate a chart. And David, I see your chart in there. Let's talk about why we annotate a chart real quick before we get into the rules. Writing your rules on the chart, guys, it's not for me. I know the rules. I've studied these for years. I can pick these out of a crowd with zero hesitation. If you're brand new and you write odds favorable momentum or you write strong triggers, you're associating this look with the advantage that it provides. If you write no termination conditions, well, then you're reminding yourself that you're following the rules. And I think that the most important rule that you guys can write on the chart is rule number 3, identifying areas inside of triggers. I get a lot of questions. Hey, Mark, is this an entry? Hey, Mark, was this a good spot to get in? Was this a good spot? If you get in the habit now of reinforcing everything you do by writing the rules on the chart, guys, you're going to find that it knocks days, weeks, months off of your learning process. The human brain will skip this. You won't write rules on your charts when you know that you're breaking the rules. Trust me on this. I've been there and I've done that. So the way the classroom works, guys, we're going to talk about rules first, and then I'm going to come back and look at your trades. If I ever miss a chart, if I ever miss a question, please repost it. Don't let me miss what you need feedback on, but sometimes I miss it. Sometimes I scroll through, there's a lot of messages, so make sure that you keep me honest too. And then George, did that help you with the limit orders a little bit, I hope? Guys, we're going to go through 3 simple rules. Awesome. 3 simple rules providing 3 advantages. Every time you follow a rule, it creates an advantage. Every time you break a rule, you negate that advantage. If I don't have strong trigger lines, well, then I give up the advantage of momentum. And if I'm trading into a termination condition, I'm giving up the advantage of a clear path. And if I just jump in the market, well, I'm giving up the advantage of an entry area. Ultimately, you may and you will take trades that forfeit advantages. I'm not sure Thala, so you're talking about the entry? Yeah. When I talk about entries, Thala, I'll cover that. That's a great question. But first, let's talk about what a strong trigger is, right? Let's talk about rule number one and how these trigger lines on your 13.2 are going to give you these key advantages. And yes, it does say 21.3 up here. Guys, strong trigger looks are going to be strong trigger looks no matter what chart they're on. When your small triggers break above the large triggers, guys, this is what paints the background green. This is what establishes your trend. Small triggers get below the large triggers, the background paints red. It lets you know that you're in a downtrend. And you can see that that happens, and your trend will change throughout the day. Focusing on the trend and believing in the trend is going to help you not fight the overall temperature of the market. And as long as the small trigger remains above the large triggers, the background color will remain green. So that's just using triggers to find trend. You don't need to know that. All you need to know is that green means up, look for longs, rules to be met for longs. Red means down, look for rules to be met for shorts. And the guys, we're going to talk about your best look. Rule number one, here comes your picture. When you're talking about strong triggers, I'm going to use my picture. There's two ways to look at trigger lines. Strong trigger lines mean that your small triggers have broken above the large triggers in an uptrend. The large triggers are wide, they're angled in the direction of the trend, guys. It's this space that's created between small and large that lets you know that the odds are favorable for the market to continue up. You're going to hear me say an awful lot, odds favorable momentum. That's the key to the high probability trend trade, is having that strongest trigger look. Smalls below the large, large or wide, angled in the direction of the trend. This is your strong trigger look. This is rule number one, identified in pictures, 100%. And if you allow this to be the precursor for each and every trade you take in your first 30 days, it's going to increase your chances of success because it gives you the advantage of momentum, the first part of that trade. If you commit to this look, you have the advantage. When those small triggers return to work their way inside of the large trigger lines, we've weakened the large triggers and anything can happen up and down. So when I look at trigger lines personally, I ask myself, do I have odds favorable momentum? Or do I have anything can happen? And if I stick to that odds favorable momentum each and every time, I have that advantage of momentum. So in an uptrend, I'm going to look for opportunities when the small accelerate away from the large until they return. And you'll see on a 13.2 chart, these tails or wicks. These will come into play in just a little bit. These are just potential entries on that smaller, faster chart. And you'll notice that they happen during the odds favorable momentum in an uptrend. Same thing in a downtrend, just looking for that best of the best, guys. Is everybody, I know I've got a lot of new people in here. Give me a Y in the room if you're comfortable with this concept. Looking for odds favorable momentum. If we look at the S&P right now, you can see that we do in fact have odds favorable. Smalls are below the large are wide, they're angled in the direction of the trend. Guys, this market is moving from a termination condition with an awful lot of momentum. How do I know that's a termination condition? Because rule number two, guys. Rule number two has me looking for areas that may reverse the market. And when you reach an area that may reverse the market, you no longer have the advantage of a clear path. In these areas that might do that, let me grab the picture real quick. These are your areas. Brand new users, I made this for you. I'm going to put it in the room because this makes it real easy to identify, to understand what it is that you're looking at if you're new to the software. Areas that may reverse the market are red Fibonacci resistance and blue Fibonacci support. There are these yellow 1-to-1 dots. These are 100% Fibonacci alternates, guys. These print real time throughout the day to provide you key areas. It can also be a divergence high, which is a magenta line coming from a pivot. It means that there was a loss of momentum at that high in price, or a divergence low. You'll see that cyan line print from the bottom of a pivot. It means that there was a loss of momentum at that divergence low. So these are the areas that may reverse the market. And it really happens based on a pretty simple process of identifying price reaching one of these areas. Price bars come to whether it's Fibonacci support or resistance or divergence highs or lows. But when price reaches an area, you have to ask yourself, where are the T3 trigger lines? Well, if you reach support and all of your trigger lines remain above, you've reached an area that may reverse the market, guys. This is what we call a termination condition. The market may reverse, so you're no longer looking for short trades into that area of support. Price reaches resistance, where the trigger lines, they all remain below. No long trades into this area of resistance. Market pulls all the way back to support. None of the trigger lines break through. No trades into this area of support. A lot of new users say, well, Mark, if I can't go long into resistance and I can't go short into support, how on earth am I going to make some money? Well, 90% of what you do is going to be reading your indicators, waiting for those advantages. 10% is going to be taking those advantages and turning them into a high probability trend trade. When a termination condition creates a full reversal, meaning that the small get to the other side of the large go from green to red from resistance, and then it provides you odds favorable momentum. This is what we call a strong top. This is the precursor for every great high probability trend trade. When price reaches support, small triggers get to the other side of the large go from red to green from support. We get a full reversal of the market. You can see that ultimately you get a clear path, you get odds favorable. There's another one of those circles. So two-part process. Price reaches an area. All you have to do is ask yourself, where are the trigger lines? If they have not broken through, you no longer have a clear path. Price reaches resistance, trigger lines remain below. If both the small triggers and the large triggers break through the area, you now have a 100% clear path. You have that second rule met. There's room to the next area. And then your ability to read charts is going to take you to a point where you may stray outside of these high probability trend trades. And you'll be able to use areas and trigger lines to understand when areas have the potential to break. And we call this a 50-50 look. This is not a 50-50 look because that's your chance of winning the trade. This is a 50-50 look because your small triggers have broken above the area. Your large triggers remain below. And with odds favorable momentum, this area has the potential to break. It has a greater potential to break because the smalls have cleared it. This is not a clear path. This is not rule number 2 met for a high probability trend trade. It's only the potential to break. So guys, do me a favor. Give me a Y in the room if you're with me. Price reaches resistance. No trigger lines break through. Rule number 2 isn't met. Both the small and the large get to the business side of that fib. We have a clear path. Only the smalls break. Yep, and we're talking about the 13-2, Matt. That's it. We're using that broad stroke of a brush to determine whether or not we have a clear path. And then I'll go back once again just to remind you. Rules 1 and 2, that's a 13-2 scenario. Every time, taking that broad stroke of the brush, because if this market is flying with momentum and there's absolutely nothing in the way, this smaller, faster chart is going to have a hard time contradicting it, if you will. And this picture kind of illustrates that. Let me show you. David, write your rules on the chart for me, please. Let me know what you're doing. Let me know why you got in, David. Talk about your rules. Another loss doesn't do anything other than put you in a negative mindset. Understanding why you take a loss or whether the rules were followed is going to help you progress with the software. I promise. I've been doing this for years, guys. I see a lot of people posting on charts. Ugh, damn it. Carn sarn it. but that doesn't do anything to reinforce your rules, does it? I don't think so. All right, so Matt, the reason we use the 13.2 and the 5.1, the large chart is defining the areas. The large chart's defining the direction. The large chart is giving you the momentum. It's just the reflection of the overall opinion. Your small chart is that small crowd. These are the yahoos that are willing to fight trend. These are the yahoos that are willing to fight all that momentum. And every now and then they fight real hard against that 13.2. And that's what's going to get us to our best of the best entries. That's what's going to give us that tiny pushback to get us to right to where we want to be to enter the market where it's likely to continue. So they work together very harmoniously. So on the 13.2, we have these termination conditions. Price reaches the area, nothing breaks through. And then Matt, just because I've got to throw a little wrench at you, there is one termination condition that I'm able to recognize on a smaller, faster chart. So if my 13.2 has a clear path, maybe it even has odds favorable momentum, on that smaller, faster chart where we see change happen faster, 3 divergences in the same price range may terminate the trend. And guys, write this on a piece of paper. This is the only termination condition that I'm looking for on a smaller, faster chart. That refinement chart will identify change happening that you won't see on a larger chart in the moment. 3 divergences are simply 3 losses of momentum. When divergence prints 3 times that negative number, those cyan from a low, magenta from a high, I've forfeited the advantage of momentum. Each one shows a slowdown. 3 of them may terminate the trend. It becomes more powerful when the small trigger lines are inside of the large trigger lines, because remember, we go from odds favorable to anything can happen, and then it becomes more powerful still. You guys that have been in the markets for a while recognize this head and shoulders pattern. I'm not a patterns guy. This is honestly the only pattern that I know or understand. But it simply means that not only could price not exceed the previous pivot, but momentum is waning once again, guys. And you'll see this from a low or this from a high when you have this type of scenario on the 13.2. So the 13.2 chart is going to be areas and trigger lines. Your 5.1, you'll identify those divergences, maybe recognizing a slowdown. And we're using these to provide momentums or to provide advantages. We have 2 out of 3 of the equation taken care of here. A trade equals momentum and a clear path coming from the 13.2. And now we're going to go to that entry area. When those rules are met, guys, when you have those advantages in place, this is the look on your 5.1. Remind you one more time, rule number 3 says that you're going to use a limit order to buy or sell a pullback, that small crowd mentality. And that pullback happens at an area of support or resistance inside of favorable large triggers. So I always feel like it's best to define those favorable large triggers before we actually go through. Favorable large triggers on your 5.1 chart mean that both the large and the synthetic are overlapping. They're angled in the direction of the trend. They're strong, moving up for longs or down for shorts. But the tighter these are, one on top of the other, the larger the advantage. So with all of the rules met on the 13.2, guys, this is the look on your 5.1 in an uptrend. There must be something going on. Paul and Sophia are posting. You'll have an awful lot of up bars. Your large triggers should be wide, angled in the direction of the trend. You can see that they're overlapping. Your job right now is you've decided to take a trade, so you're going to identify areas and triggers. And what are the areas that are falling inside of those favorable large triggers? 3 places a trade comes from: Fibonacci support or resistance, 1-to-1s, or a mid-band. And guys, the key is that they are inside of these large triggers. So with everything going up, I see 2 fibs, I see a mid-band, I see 1-to-1s. Now I'm waiting for a pullback. And when I'm waiting for a pullback, it's going to start with a reversal bar on that smaller, faster chart. This pullback signals the beginning of that small retracement counter to underlying trend, and now you're going to create your window of opportunity. Your window of opportunity for a long trade will extend from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. Because of the momentum and the clear path on the 13.2, you're going to right click on your chart and right at that highest point of support, maybe even a tick or two above it, you're going to activate a limit order and you're simply going to wait for the market. And it's either going to come to you or it's not. But if it comes back to 79.21, notice how the mid band is inside of that range, inside of those large triggers. You're now in a long position. You're in a long position with the advantage of momentum as established on the 13.2. You're in a long position with a clear path that we determined on the 13.2. And you're in a long position from the area where the market is most likely to continue from that refinement process on the 5.1. Your initial stop will go below that window of opportunity where the market shouldn't go. If the market continues beyond these areas inside of the window, you no longer want to be in this trade. Guys, this is a trade that I will take 1,000 out of 1,000 times without hesitation. Because typically 70 to 80% of the time, this is going to be your result. You're going to find yourself in a profit target reach scenario, guys. This is the highest probability trend trade. Every indicator on every chart agrees for this trade. Once you get a reversal bar in the direction of the trade, you can reduce your risk. Because you waited for the pullback, your profit potential is increased. And guys, you're going to put these all together. You're going to put together that advantage of momentum on the 13.2. You're going to put together that clear path. See how price hasn't reached that divergence high yet? And then that tail that was circled, we don't trade the tail. We trade areas of support inside of favorable large triggers. But if you go back historically and you circle these tails, if they line up with an area of support or resistance inside of favorable large triggers, guys, you have that highest probability trend trade. Can you give me a Y in the room if you're with me on this? And let's talk about windows of opportunity. Guys, this is your best of the best. I'm going to show a few pictures of the window of opportunity, and we're going to talk about a couple different things. Let me find my picture. This is for a long. The reversal bar begins the pullback, guys. This is where we identify where the window will be. From the highest point of the triggers to the lowest point of the triggers is not your window. It's the areas that fall within that range. Here you see that there is a mid band and there's also one-to-ones. I'm not trading from the top of the triggers. I'm trading from the highest point of support inside of those triggers. And I'm going into this trade with the expectation that it may go all the way to the lowest point. This teal box represents the window where the market is most likely to continue. You'll notice that this blue Fibonacci support is outside of those large triggers, therefore outside of the window. Guys, I'm going to give you a couple of these pictures. But what you're going to find is that your ability to recognize this window and to trade from it is going to increase your chances of success because great entries create manageable trades. Here it is again, the reversal bar prints, and it pushes right back to those areas of support inside of the favorable large triggers. Thala, you were asking, do we worry about these small triggers turning against us on the 5-1, right? And that's a great question because almost every high probability trend trade you take, those small triggers are going to turn against you. Remember that it's the broad stroke of the brush that establishes momentum. It's the broad stroke of the brush that gives us the clear path. This is a smaller, faster chart. All of these bars pulling back to your best entry, chances are those smalls are going to turn against you. But the key, guys, to giving you the advantage is that those small triggers remain outside. How do you decide which? What a great question. Let me take a picture of the picture and let's vandalize this thing to answer the question a little bit. And let's go through the rules because the rules are going to help kind of clarify this. So Shogun, you understand that everything starts with odds favorable momentum, right? What does that mean? That means that we have a boatload of momentum cranking to the upside, right? It's going fast and furious, and it's going north. And now we have absolutely nothing in the way. It's a clear path. I want you to think of the 13.2. You have a 20-ton semi absolutely flying, right? Yeah, small above the large, nothing in the way. This determines that it's time to look for a trade. So when I'm talking about my window of opportunity, Shogun, if I have a semi flying to the upside, which is what that momentum represents, what are the chances it's going to be able to hit the brakes hard enough to stop quickly? The window of opportunity kind of goes on that premise. And that's why your limit order goes at the top of that window because of the momentum, because of the clear path. You understand fully that it may hit the bottom, right? Because we're good. But the reality is we're not down to the very tick good. I don't think anybody is. And a lot of times you will get in on the low tick or the high tick. But by getting in at the top of the window, you're kind of guaranteeing yourself that you're not going to miss it, hoping that it hits the bottom. Does that make sense? Because there's momentum on the 13.2. There's a clear path on the 13.2. You also have very strong triggers on the 5.1. You have to be willing to let that market push against you just a little bit. Absolutely. There's your mid-band on the 5.1. But mentally going into every trade, Shogun, you're saying it might go all the way to these 1-to-1s. I'm okay with that because of the advantage of momentum, because of the no termination conditions, and because I've studied every one of these pictures on that spreadsheet that Mark gave me. And this becomes the most likely spot for a trade to originate. We'll look at Alex's perfect trend trade short. And this is a good example. Everything says down, right? See how Alex gets in at the lowest spot at the mid-band, but it went all the way up to the highest point. Premise is that regardless of how low support it will hit, resume. Well, your study, Shogun, should prove to you that the market continues from the window of opportunity more often than it does not. Here's 135 examples to help build that trust. Let's see if we have something happening live right now that might help us out. Man, I open a lot of pictures, don't I? All right, guys, here's your study. I bet you guys are going to show me pictures of this, right? Right on. Then this is practice. So Shogun, this is a great way to do it. Smalls below the large, large or wide, they're angled in the direction of the trade. Do you see it? Paul, we'll go over snag it for you if you want. Rule number 1 is met without question, right? Let's do this. You guys want to go through an entry together? Smalls below the large or wide, they're angled in the direction of the trend. Everything says down, guys. And did you notice that we're coming from a termination condition? So I have a termination condition that creates a full reversal. This full reversal gives me odds favorable momentum. Guys, areas with the potential to break are more likely to break coming from a great termination condition. So rules 1, met without question. Rule 2, I have the potential for a clear path. Let's find the entry, guys. Let's not worry about this fib. Let's find the entry. Everything is coming down, right? I don't have any up bars. The market is screaming and you're beginning to think to yourself, oh my gosh, it's going to go without me. And the market continues down. And what are we waiting for? Do you guys remember Shogun, Matt? What are we waiting for? Team Yer? On that 5-1 chart, what do I need to initiate that window of opportunity? There it is. A pullback. And a pullback begins with a reversal bar, right? So what I'm going to do is at the time of this pullback, when I have this reversal bar, guys, as you go through it initially, I'm hoping I don't crash 8. I'm going to draw a box from the top of these triggers to the bottom of these triggers. Is everybody comfortable with that so far? Not looking for the wick, not looking for the wick. Shogun, we don't have a tail yet, right? We just have odds favorable, no termination conditions. We're about to determine where that tail is most likely to happen. So is everybody comfortable? I've only drawn a box from the top of the triggers to the bottom of the triggers. Comfortable with that? Now let's find the window. Where's my area of resistances inside of favorable large triggers? I have a mid band, so I'll squeeze that box to it. Guys, all I have is a mid band inside of favorable large triggers. Do you see it? These fibs are outside. This fib is outside. Guys, my job, let me remove my drawing objects. I'm going to try and keep my drawing objects as minimal as possible. Let me take a horizontal line. I'm going to place a limit order a couple ticks below that area of resistance. Are you comfortable? Not just the mid-band, Shogun. Mid-bands, fibs are 1-to-1s, but the key is that they have to be inside of favorable large triggers. So there's your limit order. See how it's a tick or two below? Guys, the market is moving. These are moving averages. This mid-band is going to work its way down. As the market moves up towards it, see how the mid-band moves down? Inside of favorable large triggers, what are you looking for? You're looking for an area, Shogun. What are your areas? And guys, this is why it's so important for you guys to write your rules on the chart. Area inside of favorable large triggers. Right? Say it in your head. I'm looking for an area inside of favorable large triggers. Fibs, mid-bands, or 1-to-1s. These areas, shoot. I just spilled my coffee, guys. Give me just 1 second. I'm going to try not to short circuit my computer. One moment. That's okay. All right, I'm so sorry about that. I don't usually have coffee during class, but I just haven't been drinking it this morning. It was sitting on the desk and I popped right into it. All right, so Let me finish here. So fib's not inside, right? Not an area where the market is likely to continue. Does that make sense, Shogun? One-to-ones, not inside. The fib down here, not inside. So the only place we're looking for right now is really that mid-band inside of favorable large triggers. Cool. I keep my limit order, and remember, if the mid-band's up here initially and it moves down, I want to be below it. I'm willing to let the market push beyond me a couple ticks. The market pulls up, that mid-band comes down, maybe I drop it one more tick, right? Jay Solar, you can do anything you want. But I'm not sure what exactly you're talking about. So you would sell the market. Oh, no, I see what you're saying. You want to fight momentum, and you want to fight direction, and you want to fight everything just hoping that this makes it back to the midband? What if the momentum wins? Isn't this more likely to push it down than this is to push it up? See what I'm talking about, Jay Solar? But what if it doesn't go? Look at, let me finish this lesson, and I'll illustrate why that's kind of a recipe for pain. Because this divergence isn't even true until the third bar. So let's focus on the entry that doesn't fight anything. There we go, guys. There's a pullback to the mid-band inside of favorable large triggers. Jay Solar, the market is likely to pull back there, but it's not guaranteed. And if you scroll back, you'll find that the more often you fight 13-2 triggers, the more often you lose trades. This one didn't make it back to the large triggers, did it? Just on the same page right there. It pushed back. Your areas inside of favorable large triggers were well above. And then it dropped. If you went short hoping to get there, this probably ran you over pretty quickly. Shogun, Matt, all my new folks, do you see that? There's your entry, right? And there's your first reversal bar. After this first reversal bar, Thala, small triggers came up, right? Guys, your risk is 2 ticks above that reversal bar. But remember that everything, Shogun, you would have been right about here, right? That's where your order would have been waiting. Right below resistance inside of favorable large triggers. Say it every time. Right below the area inside of favorable large triggers. Absolutely. You have a limit order waiting for this market. That order is literally sitting there waiting for you to waiting to see if the market shows up. And that's not a horrible result, guys. And that's exactly what you're doing. Is you're gauging the advantages on the 13-2, the advantage of momentum, the advantage of a clear path. And then when you have that advantage of a clear path and momentum, well, then you're looking for the opportunity to potentially take a trade. Do you see how this isn't coming from a termination condition? We didn't reach the key area. Yeah, exactly, Shogun, because I don't want to miss the trade. With that many advantages in place, I have no desire to miss the trade. This is a good picture. So guys, your first trade is a high probability trend trade. Every indicator on every chart agrees for the trade. I'm going to go to the glossary of common terms. Your ability to read charts, your focus on that high probability trend trade is going to give you the skill that you need, let me show you, to read the charts. You're going to be able to understand by looking at your indicators where the market is likely to continue. This is your entry point for the high probability trend trade. Where the market is likely to go, this becomes your profit target. And where the market is likely to stop, that's that key termination condition, right? Where the market is likely to reverse. All you're doing for your first 20 trading days, focusing on this highest probability trend trade, is learning to read your indicators, learning to read your charts, to gather this information to recognize advantages. That's all you're doing, is you're practicing it. You're doing it during the live market. You're scrolling back historically like we did here, and you're circling those tails to see if the rules were met. That's all you're doing. But what that ability to read charts is doing for you is it's opening up the door 30 days and beyond for that medium probability trend trade when most of the indicators line up for a trade. However, a small issue exists. That small issue may be a loss of momentum. That small issue may be an area with the potential to break, but it hasn't broken yet. You're going to be able to recognize that issue through your chart reading. And when you execute these medium probability trades, you're going to be able to take these trades and manage them assertively, meaning that because an issue exists, if those issues begin to compound, if they begin to grow, you can exit the trade, manage assertively. If there's trouble in your way, your chart reading identifies it. You may take off a portion at that trouble spot, get to a zero loss level. So when we talk about these 50-50 trades where the smalls are through but the large are not, you're going to begin gauging. That was our small issue on this trade, but because we're coming from a great termination condition, it's more likely to work. This is not coming from a termination condition, and guys, this is another one of those 50-50 trades. We can go through the same process of seeing that window of opportunity inside of favorable large triggers. Good morning, Ben. Divergence prints, which is a loss of momentum. We're not coming from a good bottom. This is less likely to work, guys. And it takes some repetitions to understand that. So as you go outside of that outside of that high probability, when you grow with the software and you start taking these 50-50s, it's okay to let the 5-1 be perfect, to not forfeit any more advantages on that smaller, faster chart. I have odds favorable momentum in just an area with the potential to break. Good morning, Abdul. I've got no divergence. I've got strong triggers, and I have a tiny window of opportunity, guys. This is a great way for the beginning user to focus on the best of the best. And this will probably be your first medium probability trade, but I want you to remember, your knowledge is growing exponentially. Every day you're getting better and better and better. You know what? I'm not sure, Thala. I would say probably going to the indicators. And here's all your colors you can change. So you can really make it anything that you want it to be. So you would probably go T3 Nexgen Renko bars and maybe find it there. And of course, you can always get with Jason and Tech. Ty, we didn't reach the area of support. We missed it. Didn't quite get there, right? Didn't quite make that key area. See how at 1-to-1s we made it to the area. We finished the move. Here we didn't quite make it. We didn't quite hit that key area. So this is just a pivot. It's not a good bottom because the definition is a termination condition that creates a full reversal. This almost made it, but not quite. And when you see this a lot, you get to that mid band, you get to those areas of resistance, and it's 50-50. There's typically a little bit of a scramble as they try to figure things out down here. Does that make sense? Awesome. So guys, we've talked about the advantages. We've talked about momentum. We've talked about having a clear path. We've talked about being able to recognize the entry area, guys. This is your best of the best first. From here, you're going to grow. Post your trades in class, track them in the spreadsheet, and guys, please put your rules on the charts. Help me help you. Write your rules on the charts. Tell me why you did what you did, and what we'll do is we'll talk about it. I'm going to talk about one more thing before I take a little bit of a break, guys. This is my gift to you once again. I wrote this out. And guys, I wrote this very simple approach to learning the software, this plan, with the help of my brother through conversations. But this came about, I had a gentleman call me. And he said, Mark, I just need 20 minutes of your time. I'm struggling. And I said, absolutely, let's do it. And he said, I'm chasing everything in the market. I'm trying to catch every turn. I'm trying to catch tiny retracements. I'm fighting trends. I'm fighting areas. He goes, I feel like I'm looking for everything and I'm not catching anything. And that's normal for a lot of people. You feel like you have to be busy 100% of the time. The reality is 90% of the time, you're just sitting on your hands reading indicators. Guys, here's an example of how to write a simple plan that keeps you focused on the best of the best, that gives you the opportunity to recognize these advantages and to take a trade, create a foundation. And this is a trade that typically wins more than it loses. So you're creating that memory of success. It's building confidence, guys. Use the phrase, my trade is. My trade is the high probability trend trade. And in order to enter the trade, I must have the conditions of this checklist met. Guys, here's a high probability trend trade checklist. If you print this out and put it on your desktop, you'll know exactly what you're looking for every time. Is the market coming from a good top or bottom? This isn't a rule, is it? This one increases the likelihood of success, but it's not mandatory. But if you have it, you know that it's a higher probability trade. Odds favorable momentum on the 13-2, no termination conditions, area for entry inside of favorable large triggers. Guys, when they're met, I know that this is a trade that typically wins 70 to 80% of the time. And then we're going to take pictures. You're going to take pictures. Pictures of your perfect entry, pictures of your perfect long, of your perfect short, and you're going to put every one of those rules-based entries into your spreadsheet so that you can come back and study it each and every day. This will be the 4th time today that I've put this in the room, guys. Steal my checklist. Steal my spreadsheet. Reinforce these great rules. Learning to day trade, learning to read indicators, guys, is like eating an elephant. You can do it one bite at a time. It's the only way to do it. The more you try to do in your first couple weeks, the more overwhelming it becomes. So keep it simple. Allow yourself to be new. Take pictures of the best and put them in your plan, guys. This is your entire trading plan, half a page to get you going. Just entries. 20 days of nothing but entries, not worrying about anything else. And then you're going to define a management plan. And Matt, I think you are asking about a management plan. What's the easiest way as a brand new user? Guys, management takes an ability to read indicators. Define your management plan. And initially, a mechanical approach that eliminates emotion or opinion tends to be the most straightforward approach for new users. You can alter your plan when you're done with the education, guys. You can always grow. You can always make it a little more complex. But if you start from simplicity, that's going to help you focus more on your entries and a little less on the fear that you feel of losing money. So if you trade 2 contracts, initial stop will be 12 ticks. Adjusted above or below the window of opportunity where the market shouldn't go. The stop will be moved 2 ticks above or below the reversal bar in the direction of the trade. The first profit target is $100, at which point the stop moves to break even. The second target will be $200. Your initial stop beyond the areas inside of favorable large triggers where the market shouldn't go. Guys, it says 12 ticks. 12 ticks gives you room to react, and then you're going to put that stop where it belongs. It may be 10 ticks, it may be 14 ticks. But once this is in place, the only thing that's going to happen is either my stop is going to be hit, and I'll take a loser, And guys, anything that wins 70% of the time is mathematically obligated to lose 30%. The idea is that you're trading a methodology that wins more than it loses. The second step of that mechanical management is once you get a reversal bar in the direction of the trade, your new stop is moved down about 2 ticks above it because it's already done everything that you expect it to do. It's already pulled back, it's already reached the area, and it's already gone in the direction of the trade. Guys, doesn't this picture that was taken probably a month ago look exactly like the short trade that we just looked at? Patterns repeat themselves. And now there's absolutely nothing to do. I'm either stopped out or my first target gets hit. If my first target's hit at $100, guys, dopamine kick. I'm a winner. I've got $100 in the bank. They can't take that from me. Your new stop is break even. You have zero risk, money in the bank, and this mentally makes it easier for you to allow the market to move to that second target, or you're just going to get stopped out break even. Absolutely no harm. If the second target is hit, that's a $300 winner on a high probability trend trade, guys. It's emotionless. There's no anxiety. There's no room for opinion. It is nothing more than a pragmatic approach to trading the markets. Does that make sense, Matt? Did that answer your question a little bit? Cool. And the cool thing is, guys, is let me give you the PDF that I just took that from. There's that mechanical management plan right there for you. But the cool thing is, too, is, guys, it's right here in the management things as well, those exact same pictures. All of these study tools are here for you. I just need you to use them because when you do, great things happen. Look at your smaller, faster chart right at a key area, guys. There's that fight between buyers and sellers coming through. So we've done rules. We've talked about advantages. We've looked at entries, right? Managing assertively. I'm going to go to termination conditions real quick, and we're going to go back to those 3 divergences. Mark, it says that I have to manage assertively. How do I do that? If your best entry is at 1-to-1s in a mid-band inside of favorable large triggers, guys, and maybe it's one of those 50-50 trades, you can identify your first trouble spots. You can get to 0 losses. You can recognize change on the 5-1. Guys, if I'm in this short trade and I get 3 divergences and weak triggers, I can manage out for a 0 loss. That's chart reading in the moment. Being able to recognize this real time is going to give you that advantage on those medium probability trades. 3 divergences in the same location. It pushed it up beyond areas. But now there's also 3 locations, guys. You're witnessing a fight. The market can't decide whether it wants to go up or down. Fortunately, your rules aren't met. The large triggers are up, the small triggers are down. There's no odds favorable momentum. Your rules keep you out of this fight. Does that make sense? Your rules keep you out of this fight. And guys, you can just scroll back. Look at your 13-2 over and over. How many times are the rules met? Look at the time that you have to wait in between perfect trades. But it's worth it. It's definitely worth it. Jay Solar, I think so. And I think that's a great question because I trade advantages, if that makes sense. I don't trade emotionally. Everything that I do is very, very pragmatic. And I have a checklist that I use, just like the one that I gave you guys. If I'm using this checklist, the market's not coming from a good top or bottom, well, that's a no. I don't have odds favorable momentum, right? I've got smalls up, I've got large, smalls down, large up. If I just use that checklist, my only option is to stay away. And what you'll find, guys, is your success rate's going to go up when you approach every trade with only 2 options. Rules met, rules not met. So, Jay Solar, I stay away from these always. because I don't have any advantages. Remember we talked about that bad bottom, which lessens the likelihood of a 50-50 winning? 41.45 is probably where they're trying to go. Your sellers pushed from a termination condition, didn't reach the key area, pushed back to the mid-band and resistance, 50-50, didn't work. And now they're looking right now to probably continue that move and make that next key area. You'll find that these Fibonacci areas become very, very powerful. Does everybody recognize now we have odds favorable? Small's below the large are wide. Can we all agree that rule number 1 is met? Without a doubt. My smalls are below support, but my large are above. So this area right here is an area with the potential to break but hasn't broken. If we get a reversal bar on the 5-1, here's the bottom of my triggers, here's the top of my triggers. Are there any areas inside of those favorable large triggers for a potential entry, guys? Do you see how we just walked through the process? Odds favorable, 50-50. I need a reversal bar. If I get a reversal bar, let's take a picture. There's the top of the triggers, there's the bottom of the triggers. I'll squeeze my box to the highest point of resistance, to the lowest point of resistance. Do you see that window where the market is likely to continue, Shogun? Matt? Who else is new with me here? I know that I have a lot of you. Do you see how we did that even before the reversal bar? We can identify where the market is likely to continue, and now it's up to the market. It's not up to us. But I'm going to right click, and I'm a few ticks below, and man, this is my best look, right? Is it rules-based? Do I have momentum? Do I have no termination conditions? Check your checklist. This is what we call a pre-trade look, guys. And if I get that entry, where am I looking to get to, right? I can identify where the market's likely to continue. I can identify where the market is likely to go. And guys, that's what you do every day. We just walked through exactly what you're going to do. 90% of the time is waiting for it to work itself out. 10% of the time you're going to take advantage. Whoops, and look for an entry. I just went to my untitled. My bad. Wanted to see what crude oil was doing. Termination condition creates a full reversal. Full reversal gives odds favorable momentum. And that market sure did push down, didn't it? Who looked for that short, but it didn't quite get you? Bummer, right? We don't control that. All right, guys, so that's the first hour of class. And this is what we're going to do every day for the rest of your lives until you're very comfortable with what you're looking for. Going to take a lot of pictures, going to post a lot in class, and we're going to talk about each and everything that you've done. Guys, sometimes the market doesn't give you an opportunity. Sometimes that market drops all the way down, right where we knew it was likely to go, right? And now we have to wait. It either breaks or it rolls. Small triggers begin to break through. We'll just see what happens. But guys, give me a Y in the room if you recognize this lesson. It didn't make a key area, which made this 50-50 less likely to work. It came from a key area, which made this 50-50 more likely to work. Isn't that an amazing concept? That you can let that termination condition knowledge be the precursor to let you know if you've added an advantage to what you're looking at. And the market repeats itself every day. Guys, I'm going to take just a couple minutes. I'm going to go reload my water. When I come back, we're going to start going through every one of your pictures. It's kind of in the back rear view right now. The key, on the termination condition, absolutely. Price reached the area, Shogun, absolutely no trigger lines broke through, right? It's a termination condition. You knew not to go long, and it actually reverses the market and gives you odds favorable. And guys, I bet you when I scroll through pictures, I'm going to see a lot of people making a lot of money on this look right here. Dollars to donuts, that's what I see. We'll see how this 50-50 at support works out. I've given away the advantage of momentum. Absolutely it is, Shogun. These are the areas that may reverse the market. Let me give you a picture. Guys, remember, you're keeping it simple, right? You're not saying to yourself, how do I get rich? What you're saying is, how do I read indicators? How do I read these indicators so that I can determine advantages? And guys, everything that we do is sequential. And you have to understand rule number 1. And then you have to understand rule number 2. And once you understand rule number 1 and 2, right here, Shogun, do me a favor, take a picture and tell me what your question was. Because you're talking historically. Are you talking about this area right here? It was, wasn't it? Watch this. Price reached support. How many trigger lines have broke through it, Shogun? Which blue area? This one, this one, this one? Price reaches support, no trigger lines are through. Potential termination. Price reaches support, potential. And let's just go through it. Price continues down. Price continues down. Price continues down. Now my smalls are below the area, but my large are above. 50-50, right? Still 50-50. We reach the next key area, potential termination. You're talking about right here? Didn't make it, did it? They got stopped short. Look how the momentum subsides. Doesn't make it. And then when it doesn't make it, what you'll see a lot is this 50-50 isn't your best chance of success. And what happened? They scrambled and fought, and then they finished the move all the way to that key area. Guys, this is such an important pattern. And you'll see it a lot. If you just scroll back, price doesn't reach the key area. Shogun, here it is the other direction. We're coming from a termination. Price doesn't reach the area. It pulls all the way back to support in the mid-band, finishes the move to the key area. Coming from a termination, 50-50, pulls all the way back to support, finishes the move. And you see this a lot, guys. Doesn't quite make it. Support goes up to the area. And these are all patterns that you can recognize over and over again. And then you'll begin to create most likely scenarios. No, weakness in price is not a 50-50. There's no such thing as weakness in price. There's either strong triggers or weak triggers, right? There's either termination conditions or no termination conditions. And there's either areas inside of favorable or not. So that's not even a weakness. That's just a pivot. That's all it is. Does that make sense? A pivot not from an area is nothing more than the market going down and up. A pivot from a termination condition, now that's a very strong indicator. So what's happening right now? We made that key area with tons of momentum, right? They made it down to 41, 45, 67. Absolutely. The smalls made it through and the large kind of made it through. The area hasn't broken, but it has the potential to break. Do you see how the advantage of momentum has been forfeited? Smalls are inside of the large. And you're also seeing it here as well. The smalls are inside of the large. It pulls back to a midband, and it pushes right back to that area with the potential to break but hasn't broken. Now we see a loss of momentum. You're seeing that scramble without the advantage of momentum. When it hit this one with momentum, it smashed through that thing, didn't it? When it hit this one with momentum, it smashed through that thing. When it hit this one with momentum, it smashed through that thing. Guys, odds favorable momentum is the precursor for everything that you do. So now you don't have the advantage of momentum, and you also don't have the advantage of a clear path. And look how the market's reacting. Sometimes key areas overrun. But you can use those rules to keep you on the right side of things. Does that make sense, Shogun? These are some of the absolute best questions I think that you could have asked. And anytime you need clarity, guys, do exactly what Shogun does. Shogun, you're going to get right where you want to be. The more you ask, the better off you are. Guys, I'm going to take a super quick break real quick. And then when I get back, we're going to start looking at all your pictures. We're going to start looking at all your charts, going through, getting feedback. If for some reason I miss your question, if I miss your picture, just let me know. But just so you guys know what I'm working with, when I am scrolling to your pictures, this is my chat box, how I see it. I have to do this and go all the way up to the top of chat and then all the way back down to see what you're saying. So in all that confusion, because guys, I'm not as smart as I sound sometimes, I might lose a question, I might lose a picture. But before I run away, give me a Y in the room if you see it. Gave away the advantage of momentum, gave away the advantage of a clear path. Absolutely no reason to take that loser. Do we agree? And then the other side of that coin is you guys that have been trying to be patient probably took that short. That divergence with the triggers inside was your management opportunity. Pivot from beyond the area, guys. Look at this. We're going right to the mid-band. The large triggers are still down and below the areas. We're not going to look for longs until these large triggers roll and get above, right? Can you post it one more time, Paul? I'll do it right now before I leave. Can you post it for me real quick? I'll scroll up, but you will probably be able to post it before I find it. I'm looking, though. And guys, if you ever need a picture looked at because you have life to take care of, let me know. I'll more than happily drop what I'm doing and get you squared away. I'm almost there, Paul. I'm scrolling up. Man, you guys have been posting a lot of pictures. I love it. Safia got us started. Let me scroll down to the bottom. Paul, are you still with me? Can you post that picture? I'm looking. But I'm looking through an hour and a half's worth of chat. Will you post that picture again for me? And we'll look at it right now before I head out. Oh, you're in the car? All right, so give me a second. Let me scroll up and find it for you. Do you remember what the picture looked like at least so that you, when I talk, we can talk? I'm pulling it up right now. Cool. So when I look at your picture, you had odds favorable momentum. Your first trade is a momentum style trade. You moved your stop too soon and it stopped you out. Your second trade, with that odds favorable momentum in the clear path, you get in much lower than the area of resistance inside of favorable large triggers. And it looks like you get in and get stopped out almost instantly. And then you went long at the large triggers rather than short, but that may have been your stop out. Nope, so that was your second target. And then you went short and you got stopped out right at the mid-band inside of favorable large triggers, Paul, you put your stop where your entry should have gone, and it got it right at the mid-band, and this is the same one that we discussed in class, and then you get back in and you're able to get paid on the way down. So the lesson for you on this one, Paul, is don't put your entry or don't put your stops at entry points. You had odds favorable and a clear path, and you literally put a stop right at a mid-band inside of favorable large triggers. So when you go back and look at the trades, you'll see it. You got in early. That's okay. We're going to break those bad habits together. Keep posting these, but I need you to go back when you're out of the car and re-annotate your chart. I got in early and stopped out, and then I got stopped out at what should have been my entry, and I want you to do the math. Instead of taking 2 points worth of losses, you could have just taken that one correct trade, and your entry would have given you an extra $50 advantage. Your risk would have been about $50, and it would have made your profit even bigger. The second trade's awesome. We just got to get rid of that first trade, right? That, oh my gosh, it's going to go without me feeling, that fear of missing out. It's a great trade, Paul. You did great. We're just going to clean up that one little bit and let your profits really work as profits, guys. And that's what we do. Eliminating the ones that don't have the advantages, allow the ones that do have the advantages to put more in that bottom line. Enjoy your day, Paul. And guys, I'll be back in just a second, and we'll go through the rest of your pictures. Back in a minute, guys. All right, y'all. That was just a super short break. Had to reload the water real quick. I'm going to go through and I'm going to start looking at all of your charts. If you have a question, it doesn't have to be your chart. Remember that. Guys, here's that same lesson. Not a termination condition, right? Not that best look. Beyond all the areas. Mid-band. 50-50. We can identify these patterns over and over. I'm scrolling to the top. We're going to start going through. Guys, remember, if I miss your chart, if I miss your question, I want you to let me know. And I very much appreciate rules, right? Safia, those are small swings. If they don't line up with a key area, don't worry about them. Small swing 1-to-1s. I'll post the picture in the room for you guys. But small swing 1-to-1s are just, it's a lot of algebra for me. It's just a smaller swing. When you see it on the 5-1, sometimes these will give you a pushback to a great entry. But for me, the way I use them is if they coincide with a key area, then I'll look at them even more. Sorry to hear that, Gary. Shut it down. End it with the task manager. And maybe it'll help. All right, David, let's see what you got. Rule number 1, odds favorable. And I know that you use the good top, right? So it's a good top, odds favorable, clear path. David, your great entry is right here at the mid band, 1-to-1s. I think we talked about this one, right? That one's not a part of it because it's not inside of favorable large triggers. Your best entry is right here. The market comes down, divergence prints, letting you know that there's a loss of momentum. And it just pushes up a little bit higher, and then that third divergence in the same location ultimately pushes it further. David, the correct entry right here gives a great opportunity for success, especially if you're using that mechanical plan. A 10 entry, you'd have $100 in the bank, and probably get stopped out break even somewhere right in there. Great read, David. And guys, I'm not going to scroll to the bottom just yet. So I'm going to look at a couple pictures and then I'll scroll to the bottom. All right, Paul. Is this the new Snagit? Is that why these do these? Paul, let's see what you got. Divergence on a 50-50. Man, testing my eyes. Waiting at the bottom of the window. Looking for the mid-band, didn't get it, and it made it up to that key area. Just didn't give you an entry. Sometimes it doesn't. Sometimes everything will go as planned except the entry. Remember, guys, we don't control the market. The sooner you realize that you're not in control, the easier it becomes. When you stop expecting to win every trade, the easier it becomes. David, anything can happen triggers. 2 divergences with weak triggers. Entries not from an area. Guys, this is why I want you to write your rules. And I'm going to take the picture real quick. Let me jump down to the bottom too because I want this one. Claire, I'm sorry. Why do we write rules, guys? This trade didn't work. Damn it, heck, ugh, shoot, crap, right? That's what you're thinking. That's what you're thinking. You're like, man, I took another loser. This is some BS, and that Novak is full of beans, right? What if we do this? Not odds favorable momentum. Anything can happen, right? Not an area inside of triggers. Entry rules not met. Guys, I don't control the market, but I can determine advantages. If I take just the couple minutes, the few seconds to identify what I see, guys, is this a trade that provides the advantage? Is this a trade that wins 70 to 80% of the time? Is this the trade that has momentum, that has an area inside of favorable large triggers? It's not, is it? And then if I go through even more, Do you see how easy this can be? What's 3 divergences in the same area, guys? 1, 2, 3. So this is why I encourage you guys, write your rules on the chart. It's not for me. I can look at this and see exactly what's going on, right? If I can't, I shouldn't be teaching this room. But what's going to happen is that if you begin to write, you're going to begin to recognize your ability to understand advantages. And guys, it's an absolute waste of time for you to just spin your wheels. I'll just keep taking trades. I'll just keep taking trades and hope for the best. I'll hope that this somehow sinks into my head and I become successful without doing the work. Ron, odds favorable momentum and a clear path. You'll just make a little money on the way up. I love it. Once it gets ugly, you stay out. Great job. Timier, I hope I'm saying that right. Uh-oh, guys, Discord just booted me. Give me 1 second. I'll be right back. I apologize. Guys, notice it happened right when we looked at Ron C's charts. Just saying. Just saying, Ron. I look at your chart and Discord kicks me out. And I love this question. So, Timier. Tammy, thank you. That's so much easier. So watch this, Tammy. Are you ready? Do you have odds favorable momentum? Let's put a checklist on it. It's coming from a termination condition. That's a yes. Let me find an arrow here. We have odds favorable momentum. I love it. And under no termination conditions, it's that 50-50, right? It's that smalls below, but the large are not. So we're 50-50. We're good. We can look for an entry. The only thing that you were waiting for was that reversal bar. Waiting for the reversal bar. And absolutely, this is a trend trade look because while there's a fib on your 5-1, your 13-2 leads the way. Your 13-2 is where you identify momentum in areas. So without a doubt, I would be looking for a trend trade all day long there. Does that make sense? Remember that your termination conditions are coming from that 13-2. The only termination condition that we're really respecting on the 5-1, and you have a picture of it right here, is 3 divergences in the same location. Great picture. Great questions. And that's just where it's like, all right, just a little more patience. Here comes that best entry. Thank you for sharing that. And welcome to the classroom. I think that was your first picture that you get a little feedback on. Keep them coming. Keep those pictures coming. Can you guys still hear me? Discord is going full-blown wonky on me. All right, that should be back. Yeah, it cut out for just a second. Okay. Just wanted to make sure I came back. Ron's talking about the voodoo. So great picture, Tammy. Great lessons there. But you read it perfectly. And let's see, who gets to be next? David, you put another loss. David, another loss without rules on the chart. But let's talk about it. Let me put rules on the chart for you. And guys, can we do this together as a class? I know, right? Can we do this together as a class? Do I have odds favorable momentum? Is rule number 1 met? Let's write it on the chart. What do you guys think? Matt, you say no? This is why I asked. Small triggers below the large triggers. Large triggers are wide, angled in the direction of the trend. Matt, remember that this one's a little bit after the fact, right? So at the time of this reversal bar, exactly, not anymore. But the smalls are still below, right? I love it. You guys are going to get me on a technicality because we're looking historically. That's when the trade was taken. What do we think? Odds favorable? Can I get a yes? Awesome. No termination conditions. Can I get a yes? What do you guys think? Yes, absolutely. All right. Here's the reversal bar. No, it's odds favorable and it's a clear path. Rules 1 and 2 are met without question. These are separate entities, Shogun. Odds favorable momentum is rule number 1. No, you're okay. No termination conditions is rule number 2. Do you see how price didn't reach an area? It hasn't run into anything, right? So rules 1 and 2 on the 13.2 are met without question, guys. So at the time of the reversal bar, if I draw a box around my trigger lines, let's zoom in a little bit for you. Maybe zoom out just a shade. If I draw the box around my trigger lines, and then I tighten that box down from the highest point of resistance to the lowest point of resistance, guys, look at David's entry. It is at a mid-band inside of favorable large triggers. Does everybody see it? What do we think about that entry? He had odds favorable momentum. He had no termination conditions. He had the perfect entry inside of favorable large triggers. You guys ready for the hardest thing? Is this a rules-based trade? Is this a high probability trend trade? Is this the absolute best of the best? Is this a trade that wins 70 to 80% of the time? What do you think, guys? Nexgen Ben says triple yes. Yes, yes, yes. Guys, if a trade wins 70 to 80% of the time, isn't it mathematically obligated to lose 20 to 30% of the time? It is, isn't it? Guys, this is just a cost of doing business. This is part of that 20 to 30%. This is perfect. But if you take the time, guys, to go through your rules, to go through your entries, you don't look at this trade and wonder what the hell you did wrong. No. Shogun, you lost because you don't control the market. We don't want support on the 13.2, Shogun. That's a termination condition. This is the perfect trade. This is such a beautiful trade, guys. This has the advantage of momentum. Shogun, rule number 1, smalls below the large are wide, they're angled in the direction. Jay Solar, does it really? Can you show me 10 of your last trades that followed these rules? Because I haven't in my own history, Jay. In my own trading, I haven't, in my time studying, had anybody follow this checklist to the letter and do less than 70%. I haven't. It just hasn't happened. I've had people back tested over 400 days. So typically, Jay Solar, if you're losing more than 50% of your trades, the odds are favorable that somewhere part of this equation isn't being followed. But without seeing your trades, I can't verify that. It's just you telling me. And the second half of that is, are you catching every one of these throughout the day, or are you just picking one and skipping 3 that work? And I always ask that. But guys, I took this picture and I went through these rules. If you write your rules on your chart, it's going to verify that those advantages were in place. And because those advantages are in place, I'll do this. I'll call this the perfect short, and I'll put didn't work. And I'm still going to put this into my spreadsheet because it's every rule met. Does that make sense? Michelle, it means that you just blew out your account. It means that you just hit your stop loss. So they pulled you out of the position. Remember that Apex isn't just a $1,500 stop loss or a $2,000 stop loss. It's trailing. So if you go up $1,000 in a trade and only make $200, you've just shrunk your stop loss by $800. So if you go through and reset, if you're trying to reset, it typically takes about 5 minutes. Oh, you took a trade and it crashed, yeah. Oh, you don't want to be like me. I hope you're talking to Ben. Does that make sense though, guys? We went through David's chart, and the annotation on the chart was another loser. Another loser. That's how that one was described. If you're not posting in class, guys, you're going to say this is another loss. You're not going to say that's a perfect high probability trend trade. I'll take that mother scratcher every time. Paul, another example of a top window. I don't know what that means. 50-50 from a bad top. No divergence. It goes to the top of the window and then works its way down. Is this the same trade? Same picture? It's a 50-50 trade from a bad top, right? No divergence. You've got your window of opportunity, and that market comes up, tests resistance. It's a good shot at a 50-50 without a doubt. That bad top was working against you just a little bit. Safia? Well, look at this one. Market is coming from a good top. Safia, you're making me proud right now. And there you go. Ben, thank you for that. Guys, I love this community, taking care of each other. Safia had odds favorable. She had that 50-50 look, strong triggers. Look at that entry. Safia, I hope you can hear me right now. This is a beautiful trade, isn't it? Guys, look at that entry. Shogun, do you see it? Area of resistance inside of favorable large triggers. Everything starts with momentum. Oh my gosh, you can do this. And the key is, don't take the ones that don't look like this initially. Safia, great job. Beautiful trade. All right, everyone do it with me. Steal Safia's trade. Take it to your spreadsheet and put that darn thing in there. What a beautiful look. Don't we all want to be able to do this? Safia, you sure seem to be showing up in my spreadsheet a lot. Are you ready, Tammy? The checklist you need? Here you go. There's a copy of it. That's just the checklist. And you know what, guys? Let me give you this one too. Here's a copy of that checklist, everybody. But I stole pictures from the manual to show you what it looks like when the rules are met. Shogun, the idea is that you guys do exactly that. Here's your trade tracking sheet. There you go. Download it and make it yours. Guys, I'm not telling you to use my spreadsheet. I'm telling you to build your own spreadsheet, right? You don't need a new document every time. Every time I add to this spreadsheet, I have it saved on my computer. I click save. And then if I close it, I have it saved over here. I double click, and there's my spreadsheet. All right, who's next? Let's see. Scrolling up, guys. This has been a great class. You guys have asked some of the best questions today. I appreciate it. All right, that was Paul. Thala, let's see what you did. And guys, when you're all amazing and you post the same trades, I'm just going to say good job. 100%. Thala, you took the same trade as Safia, and you guys both did amazing on it. Nice job. Paul, you say the struggle is real with Snagit. All right. Paul, are you with me? Let's do a quick Snagit tutorial. Claire, same trade, same result. Absolutely beautiful. Paul, you keep posting the same picture. Okay, I think I know how to fix you. But there's that same trade, same result. Nice hold. All right, I'm going to jump to the bottom real quick. Paul, let me know when you're back and you want to talk about Snagit, or if you want, we can do a little Snagit tutorial at the end of class to make your life easier. Or the next time I take a picture, I'll talk about everything that I'm doing. And hopefully that will help. All right, Dave B. Bet I know what Dave B did. 50-50, right? Poor top, 50-50. Not odds favorable on a 13 range, but you do have it on an 8 range. You get in. You went above those little 1-to-1s. You're able to get paid. Dave B, great trade. And what's cool is, guys, when it's not perfect, bad top, 50-50. As you grow, Dave B, you could have used that market flow chart. Kept you out of trouble a little bit, and you would have ended up maybe even a little better on your entry. Nice job. Good job putting the stop where the market shouldn't go. Ron, everything says up. You let it clear. Trading that news and it works out. All right, Safia, let's see what you did at 10:06 a.m. You traded into the news, and it's a 50-50. And Safia, are you with me? 50-50s from bad bottoms. 50-50s not from termination conditions, or a little less likely to work. Your entry's perfect, right? But because it's not coming from a key area, I become a little leery. And then that news made it bounce around a little bit. I think it's a perfect entry on a 50-50 trade. But those 50-50 trades that aren't coming after a great termination condition are just going to have a smaller win percentage. If you go through and look at 50 of them, you'll be able to establish some sort of pattern there. Because never take my word for it, guys. Always do the work. Assume that everything I said is a bunch of baloney. And then David, that was a repost. All right, Abdul. Guys, take a note out of Abdul's page. He loves pre-trade pictures. He talks about what he sees, why he's doing what he does. Pre-trade, I think this is that same 50-50, isn't it? Not from a great top, odds favorable, 50-50. It went up to the top. And I can't see what you did on entries and exits. But this is a pretty good lesson. 81.47, when price reaches resistance, where are all the trigger lines? Do you guys see this? You scroll back to the bottom. Everything goes down and price pulls all the way back to resistance. Do you guys notice how your small triggers are still down? Do you notice how your large triggers are still down? Isn't 81.47 just a termination condition from that little upwards push? And I think Dave B put his stop just behind that key area. It kept him safe in a market that said it was going down. It just had to dance a little bit at that area that hadn't quite broken. Abdul, it's a good trade. It just required a little larger stop because you had given away the advantage of a clear path. And then you tried an edge trade. You love this edge trade. Do you have a 21 yet? You fight a lot on these edges. And just look at the difference. Everything says down here, that edge is beautiful. Everything says up with momentum here. You're just hoping that it holds. So what we're talking about, Safia, on those 50-50s, just when we're looking at best of the best, when we're looking at... because 50-50 we already understand is a medium probability trade, right? You do. We just got to get you taking it with advantages, Abdul. Which means that you have to build a 21 chart. If you continue to refuse to build a 21, you're going to keep getting run over on edges. Because that's one of the rules. You're circumventing one of the rules completely. So go back and look at your edges, Abdul, from the last 5 or 6 edges that you've taken, and build a 21 chart and see what the 21 chart said on the ones that worked and the ones that didn't. And I think you'll be surprised. So Safia, I'm going to give you this picture too. This is one that was put together quite a while ago. Lack of divergence. It's a bad top. You're not coming from an area. The 50-50 look is defined when the large chart triggers are down but not below the areas. A 5-1 chart, low on the bar. Like, you can have a perfect entry on a 50-50, but when it's a bad top, especially no divergence, and I think that's what we had from the bottom, that continuation of the trend becomes very likely when that 50-50 is there at that mid-band, stuff like that. So let me go back to yours. See how there's no divergence? It didn't come from the key area. And that 50-50 is right at the midband and resistance. This is one that I'm willing to miss, personally, in my own trading. I'm willing to miss this one, or I'm at least willing to let these small triggers roll over and give me more of an advantage, because it is a lower probability trade. Does that make sense, Safia? Oops, and Discord kicked me out. We will never know if that made sense. That's not true. I'm on my way back, guys. Here I come. All right, should be back. You guys should be able to see me again. You're very welcome. And this is it, right? So Safia, what you're doing now is you're really illustrating the path. And you probably don't realize that you're being such a great help in classroom today. Your entry is perfect. And this is the first part of the equation, is just recognizing the best of the best entries because it makes things manageable. And then you're going to start incorporating these little pieces that are going to make you better and better all the time. But you're nailing entries and you're getting your conditions, and now you've got this little piece of knowledge in your head that says, hey, when I have a 50-50, yeah, and it's a great entry. Safia, this is your absolute best look, right? Except for what? Divergence. So not only now are we not coming from a good bottom, but we also have a loss of momentum on an area that hasn't broken. Does that make sense? When over here, you had the advantage of a great termination condition that it reversed the market. Yeah, and you will. Guys, you will. The more pictures you take, the more seat time you get, the more repetitions that you have, you're going to begin to recognize all of these things that I talk about in class over and over. And if you remember when we talked about that one in class, before it ever happened, and I think it was the S&P here, before it ever happened, before we ever got there, I said this bad bottom right here, guys, price is probably going to come down to this area, and didn't it? My brother, when he used to teach this class, would do that. And he would say, and Safia, I would take the same long that you took. And he said, well, probably don't want to take this long because it's a bad bottom and divergence printed. It's probably going to here. And I would be absolutely floored that he could do that. Jay Solar, did you take this one? Picture perfect? What about this medium probability trade? Did we get into this one, guys? Hopefully you guys are going to show me some pictures of these. All right, I'm going to scroll up. Let's see where we are. Guys, I really do. I say this all the time, but I do mean it. I appreciate all the pictures. I appreciate the time that you guys put in to annotate, to help me out, to help me help you. Andy, 2 trades. The first one is, I'm trying to figure out where we're at here and what we're doing. Great momentum style, page out of Ron C's book. Here we had support, a little indecision in the triggers. You take the pivot stop out. Multiple. The first one is a lower probability, fighting trend, finding large triggers. Once everything rolls, it makes your life pretty easy. Nice trades, Andy. And then you'll see Ron C took kind of the same style trade, right? Everything says down with a clear path. Gets in, gets out. 10 ticks on a 4-lot, guys, is a $400 trade in a matter of seconds. Pre-trade short. Abdul, losing momentum, losing momentum, losing momentum. Areas outside of favorable large triggers. Breaking rules, breaking rules, breaking rules, and it just didn't work out, did it? Does anyone else take a trade that breaks the rules and just think to themselves, dag nabbit, I didn't have momentum. Dag nabbit, I didn't have a clear path. Dag nabbit, I didn't have an area inside of favorable large triggers. I knew better than this. Why did I do that? Well, it's because you got bored. And guys, everybody's going to break rules. I still break rules some days. We're all going to go sideways. But the key is to learn your rules so well that you understand that you've broken them, that you realize that you've given up that advantage. All right, Zeba. Trading into the one-to-ones without momentum. Loss of momentum, loss of momentum. Areas outside. You wanted to enter here, you didn't enter here, right? Zeba, a little bit of difference. You wanted to enter here, but you didn't. You entered here. Look at where your limit order is. I think it's basic mechanics that you're struggling with right now, Zeba, of getting in and out of the trades. Have you watched this video? You did enter the first one, but you had to move what? Your entry? Where was your entry? At the midband outside of large triggers, or was it at the area inside of favorable large triggers? Because you're about to set me up for a great lesson. Inside for sure, without a doubt. So the market came to your entry at 80.76 and ran all the way past it, 9 ticks, and didn't fill you? Are you sure, Zeba? Gary, I think you're coming up in the line. Okay. Then you're having challenges with NinjaTrader. Do me a favor, Zeba. What time was that? At 9:22-ish? Go to your orders. And at 9:22, show me where that sell limit was. You should have a sell limit at 80.76. Will you do that for me? Cool. Because I just want to make sure. And then just open up your orders and take a picture of them if you don't mind sharing that. You can send it to me privately if you want. You don't have to post it in the room. All right, Dave B. and Gary, I'm about a click or two away from yours. Weak triggers on a 50-50, right? Weak triggers. If you take the best entry, there's your management. David, way to give up a couple advantages and manage assertively. Perfect. Tank. It's just fun to call you Tank, isn't it? Smalls are working their way back, but we're still cruising nice. There's that pullback directly to support inside of favorable large triggers. Great entries create manageable trades. Tank, the only thing I'd say about this thing is already working its way in the right direction. No reason to keep that much risk on a trade at that point. Great entry. Gary, termination, 3 divergences. 3 divergences. A lot of arrows, no annotation, but no trades in the termination conditions. Abdul, termination. Divergence from a termination, you take the entry. Because of the termination condition, you say that you'll manage it very tightly. Never makes it back to that termination condition and then heads back down. Guys, only you can decide whether or not you want to trade into a termination condition. Only you can decide if you're willing to break your rules. Me personally, I hate trading into termination conditions. For me, it just seems silly if it could reverse the market. Alan likes a clear path. Everything says down, absolutely nothing in the way. Rock star entry and money all the way down. Nice job. Guys, there's another bad bottom that goes to that mid-band and resistance. Finishes the move. We see that a lot, don't we? Gary, you bailed. It looked like the triggers were getting weak. Gary, the triggers were weak before you ever got in. Your area wasn't inside of favorable large triggers. You even had a reversal bar from way beyond the outer bands. Can I say something about the triggers, though? It's easy to say I bailed because I thought the triggers were getting weak, right, Gary? That's what you said? These triggers are starting to turn in the direction of your trade. What really happened here, probably, if I can use my own history as an indicator, is right here. You said, all right, I'm up this money. I have zero willingness to give any back. So you created an arbitrary stop movement. You went break even +1 because you were scared to lose. So you never gave this trade a chance. You made the decision. So guys, I can't stress this enough. If you're scared to lose a trade, it's probably the wrong trade, right? Why were you scared to lose, Gary? Because you knew you gave up momentum, because you knew you weren't trading from inside of a favorable large triggers. And this is just a guess. Good top or bottom in place, that's so far away. Termination conditions, you didn't have any. Odds favorable momentum, didn't have it. Area outside of small triggers. Gary, it's hard to read your checklist. What are you looking for an entry? You're looking, smalls are inside of the large, but you said that they were outside. Odds favorable triggers on the 13-2. You didn't answer that one. Do you see how checklists only work if we use them, guys? And the more things you put on a checklist, the more opportunities you have to fudge your checklist. Brand new users, is there any reason to complicate this? They work. Just saying. Gary, I think you're confusing yourself. You're giving yourself too many options, too many opinions without being clear cut. Alan, same trade. We already saw that one. Nice job. And guys, those pictures where there's too much going on, those are the ones that caused me to develop a super simple checklist. Those are the ones that got me creating this super simple plan. No, nobody wants to hear this, but I'm not the sharpest tool in the shed, guys. I'm a dreamer. I'm a daydreaming kind of guy. Yuri, you have odds favorable momentum and you have no termination conditions, and you take a perfect entry at a mid-band inside of favorable large triggers. Yuri, I love everything about that trade. Gary, odds favorable, clear path, perfect entry, easy money. Guys, it can be that simple. Dave B, you going to show me the same thing? Yeah, you are. Odds favorable, clear path, perfect entry, easy money. Safia, you went long. Same scenario. Absolutely, Safia. Bad bottom, straight to the mid-band. All right, guys, here's our next lesson. This one's on termination conditions. See if I can grab that picture. Do you see how far away those large triggers are, Safia? All right, guys, so when I go to termination conditions, this is one of my favorite ones because it's not an opportunity to get into a trade. What this is an amazing opportunity. Yeah, Paul, I'm able to blow those pictures up in class. So you're okay. Guys, if price pulls away from the synthetic triggers too fast and too far, it typically snaps back to those large triggers. And this is the gap theory, and all the gap theory is, it's not an opportunity to get you into a trade as much as it's an opportunity to get you out. And this, you see this, price reaches a mid-band if the large triggers remain a full bar away. Price is likely to close that gap to the large triggers. Price hits resistance, the large triggers remain a full bar away. You're likely to close that gap to the large triggers. And you see this over and over. And Safia, that's what got you here. Not only was it a bad bottom, but we smacked right into that mid-band. And you notice how the large triggers just didn't come along at all. And Dave, you didn't enter because of the flat triggers right here. Let me go back to your picture. Make sure I didn't miss something, and I may have. Sometimes I do, guys, and I apologize. If I ever miss something on your charts, get me back in and keep me honest. Hindsight, you were nervous because of the flat triggers here. Which flat triggers had you worried? On the 5-1? So they're rolled and in the direction, right? Is this a bad top, Paul? Is that what you're saying? If you didn't catch this trade, guys, it's okay. Not at all. Isn't this a termination condition? And let's walk through it. Paul, if you reach a mid-band and the large triggers are a full bar away, isn't this a termination condition? And here's the cool thing is if you're not sure, watch this, guys. Let's go to rule number 2. Large chart midband if the large triggers are a full bar away. Uh-oh. So now I have a termination condition that creates a full reversal that gives me odds favorable, right? So I feel pretty good about that. And then Dave, you've been around long enough. You know that when the market doesn't come from a great area, doesn't it typically continue the move to the next great area? To that next Fibonacci area? Are you familiar with that one? All right. So Dave, I'm going to take the exact same look and let's talk about advantages. And I'm going to use a white arrow. Termination condition that creates a full reversal. Odds favorable momentum, right? The smalls are through the area, the large are not. So technically it is 50-50. Your 13 range is screaming to the downside. Your 8 range has odds favorable momentum. Your smalls are well below the large, and those large and synthetic are one on top of the other, and you have a perfect area inside of it. A lot of advantages on that chart. Would you guys agree? So what you have here, Dave, is a 50-50 trade from a termination condition with odds favorable momentum, with every chart supporting it. And your window of opportunity is really pretty small. I love this trade. Does that make sense to everybody? And yeah, Safia, that long, and then you got wrapped up in not catching the long that you missed a beautiful short. Yeah, you're very welcome, Dave. I think this is a beautiful trade. Absolutely beautiful trade. Because it has the advantage of momentum. It's a 50-50. We're coming from a termination. And then if we look back 20 minutes. That's a bad bottom, which means that when everything lines up, it's probably going to make that next key area. Great job, Dave. And then Gary. Termination. Let me figure out where your fibs are. 32, 33, 31. So here's that fib right there. So termination with absolutely no momentum. No trade, right? So here's the question. Let's do this real quick. Are you showing all of these arrows pointing down, wondering why you didn't get in here and get that money? Because people are going to do that. Oh man, I didn't take that trade and it went without me, right? Gary, were your rules met? And this is for everybody, not just Gary. Gary, I feel like we have a relationship, so I can do this. Your rules weren't met. Because your rules weren't met, you didn't take a trade. Why? Because rules provide an advantage. Because rules give you the advantage of a clear path. Guys, you have to be okay with whatever happens after you don't take a trade. If your rules aren't met and you skip a trade and it goes 1,000 miles in the direction, you made a pragmatic decision based on advantages. So Gary, it doesn't matter. Doesn't matter what happens after the trade. Because what you're doing is you're trying to tell your brain, well, this one into a termination condition worked, right? I love it. I love that you didn't take that trade. Guys, don't worry about what happens after the trade. Worry about rules met or rules not met. All right, Tricky. 13.2 says odds favorable momentum, 50-50, right? Coming from a pivot stop out. I like that. Pivot stop out. It's not from an area, but it is a pivot stop out. We've got a 50-50 at the 80-41. One divergence prints, great management, quick profits. Second divergence prints, smalls are coming down. You say, you know what, I'm going to manage out of this one. Tricky, I don't think you could have taken that trade any better. Great job. All right. Zeba, weakening of the triggers, right? Weakening of the triggers. Not an entry in an area inside of favorable large triggers. You managed to make a little bit. That's an early entry. Zeba, I think I just figured out your challenge. I think that I just figured out your challenge. That's not a late entry, is it? What area are you trading from? There's none, right? That's okay. So what? Okay. Ziba, let's go through this then because, oh, this is great because you just kind of had, this is your step back. Are you ready? I'm going to fix you right now. And it's going to be easy. I got you. So let's use this picture. Ziba, you're amazing at recognizing momentum, right? You have no problems with that. Odds favorable, strong triggers, guys, everything. This is great. And Ziba, you're comfortable with seeing that that didn't reach an area, so you feel good about the clear path. 13.2 isn't your challenge. Can we agree? Perfect. All right, so here's what's happening. When the 13.2 says go, you're getting excited. You're like, I got to be in a trade. I got to be in a trade. I got to be in a trade. And you know that you're waiting for a reversal bar, right? You're like, oh, I need that reversal bar. Here's the part that you're skipping. Here we go. I'm going to give you this picture. After the reversal bar, you are not entering. You are creating a window of opportunity. So what you're doing right now, Ziba, I've got you figured out, is you see the reversal bar and you're like, I need to be in this trade, right? So you keep thinking that you're missing trades. Yeah, and what you need to do, is when this reversal bar happens, Ziba, we're looking for the areas inside of favorable large triggers. And your entry comes from, I'm just going to call it the woo for space. So your entry comes from the window of opportunity. And that window of opportunity is areas inside of favorable large triggers. Does that make sense, Ziba? I told you I could fix you in a second on this one. So you are 100% spot on. You just need to wait for it to come back to the areas. And guys, this is why posting... I know, stop swearing. I'm going to get you a swear jar. Whoops, wrong one. Are you? So, Ziba, is it possible, and let me just throw this out here, is it possible that you are very particular about the wrong rule? That a misunderstanding of the rule has you very particular in misunderstanding where that limit order should be going? Is it a possibility? I feel like it could be. Gary, you get that advantage. Because I did this too. I think everybody does this. If you don't understand the rule completely, you're more prone to not execute that rule properly. So now, to sound like a broken record, because that's what I do in this room anyway, I suppose we can talk about rules one more time and why it's so important to annotate the chart. Odds favorable momentum, yes. No terms, yes, right? And then what happens if we write on the 5-1 area for entry inside of favorable large triggers? So Ziba, do you see how this may remind you? And then here's the picture that you need to take in the moment. Ziba, every time you're going to get into a trade, every time you're ready to pull the trigger, let me go to some live charts. Every time you're ready to pull the trigger and you put that limit order there, Ziba, and guys, this isn't a trade, there's a termination condition, take a picture. Take a picture of it and make sure that your entry is where that entry belongs. Does that make sense? So set your limit order, because there's nothing to do after it's there anyway, right? Take a picture before that order's filled, and let's start seeing, are you at areas inside of favorable large triggers, or are you really having Ninja 8 problems that no one else appears to be having? Because I think that's what it is. And I know this, Ziba, and I think we talked about this before, because my wife did the exact same thing when I was teaching her the rules. Is she kept getting into these trades right here. So that reversal bar would print, and she would just hit sell market. But once she started waiting for the pullbacks, it became a little bit easier. And then Paul says, if you decide not to take it because a rule wasn't met, who cares, right? If it did what it thought it'd do. Bring your photo up. There you go, Ziba. On this one, you don't have one, do you? There's no areas inside of favorable large triggers. Does that make sense? You think what is? You think that your entry is in an area inside of favorable large triggers? It's inside of triggers. What's your area, Ziba? Is it a Fibonacci resistance? Is it a mid-band, or is it one-to-ones? And I think that this is where the challenge is coming in a little bit. Ah, there it is. It just clicked, didn't it? Well, the mid-band's not inside of those trigger lines, is it? So it's not even that you're too far. It's just not in the triggers. Boom. There's our aha. Great job, Ziba. Thank you for posting the picture and being willing to talk about it. Because now what you're going to be able to do is you're going to be able to take your trades. And here's a good look, just like yours. No, the issue wasn't that the market was moving fast. The issue is that you didn't have rules met. Mid-band's inside of favorable large triggers. You didn't get left behind. You got run over because the rules weren't met. Because you didn't have momentum. Because you got in, you broke two rules. Yeah. So don't blame it on the market moving fast. Oh, your third language. I love that. You're doing great. I don't feel like you are. I feel like you're doing wonderful. And I think what happens, Ziba, is you get this understanding and you keep it really, really simple. And your brain starts saying, you're not taking enough trades, Ziba. You should be taking more trades. And you start looking for opportunities. Yeah, I do the same thing. We all do. I can't stress how normal your path is. Because you're learning to read your charts, right? You're learning to see these advantages. And sometimes you think that it's met and it's not, and that's what posting the picture does. I think you're doing wonderful. And I think that you're on a great path. And every now and then, we're going to refine it just a little bit. And can I tell you how amazing it is that English is your third language? Most Americans speak one. So great picture, just a little bit outside of the rules, and I think that's where the challenges came in. But great opportunity to kind of readjust and refocus, right? Paul and your tiny little pictures, come on. Thought it would get there. Great entry on a great trade. You got out with divergence, and that's fair. You'd lost momentum. So you got out with divergence. There weren't any areas inside anymore. Paul, I don't think there's anything wrong with that exit. A loss of momentum is a loss of momentum, right? Pivot from nowhere, come into that mid-band, kind of a 50-50, divergences, no areas for entry, and still weird over here. This is a great picture of just rules not met. All right, George T., what are these magenta dots? Can they use an area inside of triggers? I love it. I answer this question all the time. So what these are, George, there's no rules designed around these magenta dots. They're a small swing. No, you're not, Claire. Give me just a minute and I will, and I'll go through it. Let me get through these pictures and then we'll talk about one more time what we're looking at and what we're doing. So these are small swings. George, there's no hard and fast rules on them. My rule of thumb is if they line up, yeah, but they're from smaller swings. If they line up with resistance, if they line up with support, I like it. It's a little added giddy up, but I'm not taking trades just from these one-to-ones, especially if my synthetics are still red and down. So when they line up with areas, it makes me feel good about it. And I'm closing out pictures as we go just to keep resources in check. So there's that termination condition, guys. Price reaches support. Absolutely no trigger lines break through. That's a good bottom. Now we're just waiting to see if these areas clear. Waiting for that clear path. All right, Abdul, pre-trend trade long. Bad bottom. Strong triggers. You're at the mid-band. Divergence prints. You get in below the mid-band, right? Your stop's down here where the market shouldn't go. Your stop keeps you safe. Your target is reached, and then you got stopped out. Abdul, are you with me? What happened on the 5-1? How many divergences did you get? Ooh, did you? Here's one. Here's two. You entered after the second divergence. And then that third lower divergence with the triggers inside, that can be a deal breaker, right? So we're coming into the key area. All right, so that's your first. It was. That's your second lower, the triggers inside. If you move your stop behind that one, it comes up and just got you. If you're using this 8 range though, you had divergence. Smalls are on the wrong side of everything. Your large triggers are starting to roll. Can you see the slowdown here? And then your 8 range was very, very, and it got you, didn't it? It happens. My stop, if I was going to hold this one for a longer trade, my stop would have been probably behind this pivot. Just like my stop is behind the pivots here, same thing. But by the time we get over here, it's changed completely on the 8 range. There's no momentum on the 13.2. Everything is going up. So that stop outside of the large triggers where the market shouldn't go, because this just pulled right back to a mid-band inside of favorable large triggers. It hit that HVA line. It just pushed a little bit beyond. I think as a good effort, they just wanted to push a little lower before they went for the continuation. And then Paul, you say you knew something didn't feel right. Bad bottom, at a mid-band. Technically, this is a pivot stop out. It just pushes lower. Seeing those 3 magenta lines, everything that we just talked about there, right? You're welcome, Abdul. I think you just start losing a little momentum there. And it just doesn't work. And guys, the only time I'll treat a mid-band, you can't, Alex, as far as I know. As far as I know, there's no way to do it. You have to put in your password. But I could be wrong. That would Each time I do it, every morning I do it. And I'll never get that 4 seconds back. Good. I'm glad that was taken as funny and not smartass. That was intended to be funny. Yeah, I think that you have to. I think that if I remember right, when they started all of the upgrades to 8, there was a talk in their forums about maybe changing that one day. But guys, isn't it great to have to use a password? Like, why not be protected? This is access to your money. You use a password for your bank, don't you? Use a password for your credit cards. Why wouldn't you use it for your trading account? No different than your bank. A lot of great pictures today. Yeah, exactly. So Claire, in regards to having to use, having to draw your fibs in. So one thing John did pretty recently, well, let's do it. We have 10 minutes left. So let's just go through it. So Claire, every morning, the first day, it's a pain in the ass, guys. Pardon my French. The first day it's a pain in the ass. Oh my gosh, I have to go through and do all these steps, right? Guys, when I open up, I was already deleting tick and cache data every day, wasn't I? For NinjaTrader 7. Claire, you did that on 7 anyway, right? Cool. So really the only difference is on my NinjaTrader 8 every morning. I do the database and I get rid of the cache and the tick. And then I go back to NinjaTrader 8 and I go to the temporary folder and I delete everything inside of there. And then I go back to NinjaTrader 8 and I go to workspaces and I'll delete the recovery folder in there. And that's most of what it is. And then it's a matter of just making sure that your computer is running clean, making sure that it's running fast. And John did this whole video right here. This has really, really helped. And it's that morning checklist. And that's exactly what this is. This is your morning checklist. Things that, and these are just observations, Claire, and this works for me. And I've been using Ninja 8 pretty exclusively lately. When your charts are loading, let them load. Don't mess with it. When you draw on a chart to take a picture, take those drawings off, because what happens is it layers every time you do it. Yeah, if you're crashing every few minutes, guys, I've taught the whole class with 8 open. I go through the checklist every morning. Michelle, do you move your charts a lot? Are you one of those people that draws a lot and goes through and does this and keeps doing this? When my charts are loading, I leave them alone. I let them load. I make sure that they're done. You can literally hear the computer whirring, going brrr as it's calculating and doing these things. And that's your computer chugging a little bit. How many charts are you running? Is your computer fast enough to handle it? Do you have the memory? The faster your computer, the stronger your computer, the smoother this goes for sure. Jason says yes. I crash when I draw and I leave the drawings on there. And I'll crash if it's trying to load and I'm impatient and I start moving things. Let's see, delete this chart as well. Everything, and you want to do this with the computer closed. Everything in the temporary folder goes. Show me a picture, Shogun. Are you sure that those are fibs and not divergences? I know the answer, but show me a picture. So show me a picture of your chart, Shogun. You upgraded to 64 and it stopped? Me too. Shogun, are you asking me why this fib has a negative 149? Is it a fib? Let me get to my pictures. So Shogun, take a second and study this. These are your areas. Red solid lines are resistance. Blue solid lines are support. These fib colors will never change, Shogun. So, and I say this respectfully and not as a joke. Are you colorblind? Because some people are colorblind and it creates confusion. I've seen that before, and I've seen people adjust their charts. Okay, just checking. So do you see how this is cyan and this is blue? Pretty distinct difference. So this cyan line with the negative number happens whenever divergence prints, whenever there's that loss of momentum. Same way this magenta line prints. So what you're looking at in that instance, it just lets me know that divergence is true. It doesn't have a significance in regards to the strength or anything. But when this negative number prints and that cyan line prints to the right, or we haven't had divergence at the top lately, or that magenta line prints to the right, it just lets me know that there's a loss of momentum there. When it happens right here at a key fib, that divergence makes that termination condition even powerful. So Shogun, I want you to think of these negative numbers. It's like pregnancy. You either are or you are not, right? Nobody's ever a little pregnant or nobody's like super pregnant. You're either pregnant or you're not. That's how this was described to me. I kept trying to assign worth and value to these numbers. No. If it prints, divergence is true. See how it's fluctuating right here? This means that I have potential, but until this prints and one of these lines print from it, this is just potential. You have the potential to be pregnant, and here you're pregnant. Does that make sense? The pregnancy thing did wonders for me. It cleared it all up for me. Paul, I know what that big bold next means. It means that you had odds favorable, you had no termination. You took the trade, it didn't work. Not the best momentum. Not the strongest of the strong. We're at the tail end of it, for sure. The area begins to fall outside of the large triggers. It's a good look, not the best look. Yeah, Michelle, maybe rerun the installers. I did it yesterday. And yeah, and it's a whole new setup. And then Claire, the new installers on the resource page will actually give you workspaces that have that tick data, that have everything. And then when you do it, it works out pretty well, is what I've found. That's been my experience so far. Is that if I follow this to the letter and I'm on the most current, go ahead and run those installers again. What I've found is I can run 5 charts. I can run a 21, a 13, a 5, and a couple range charts. And I have synthetics on all of them, and I'm just not having challenges. The only time I start to have challenges is when I try to do silly stuff with my charts. Yeah, and I agree. But Ben, I'm not going to lie. I was probably one of the last people to switch because I'm old and crotchety and set in my ways. And then when I did switch, I didn't do this. So Claire, Michelle, are you doing all that with NinjaTrader closed? Are you closing out 8 and then going through the process? So this is what I would try, and this is what I did yesterday. And I actually had corrupt data yesterday. I didn't need to do this, but I did it. And this is a great way to end classroom today because I want you guys comfortable. So Claire, go ahead and go through. Shut down NinjaTrader 8. Go ahead and get rid of your old charts and templates and get that really fresh start. And then download the file and run it. And before you open it, go through the stability. And then at that point, you should be pretty solid. That's what I did yesterday. And I'm telling you, I've been rock star good to go ever since. Termination condition all the way back to support. All the trigger lines are above. Guys, you're in a holding pattern on the S&P waiting for advantages. And I believe that's class today, guys. Good job, everybody. Thank you for being here. Thank you for the questions. Thank you for the questions. I can't stress it enough, guys. Y'all really tell me what this class is going to be. Your pictures, your questions, your posts tell me what this class is going to be. And I appreciate it. And it is a community, Michelle, isn't it? Everybody works together because we all have the same goal. And I try to say the same thing 1,000 ways because everybody's going to get it at a different rate. Everybody has to hear it a little bit differently. So until tomorrow morning, guys, that's it for me. I'll see you tomorrow, 9 a.m. What's your one thought, Ben? Ben's going to impart a little wisdom on us here. Always a good thing. And guys, if you're one of the people that text me in the middle of classroom, I don't see private messages until after class. I'll get back to with you. Ronald, we got instructions. So in that temp folder, everything inside of it. Everything inside of it. Yeah, Ben, you can have it. That scares me just looking at it. Why are you not using the 8-range market flow? I use it every day. And a 13. Yeah, there is. You can build one. You can build one. Here, I'll show you guys. Let me pull up my crude oil. Can you guys see that? What happens if you scroll over and look at all of these, Ben? Is there one there to the right? I know there is because I downloaded them yesterday. Guys, that's 5 charts, 2 range. There they are right there, Ben. You see them? So if I go to my templates and I stretch this out, 8 range chart with market flow 2023. It is a lot of templates. And then if you're using the 13 range, it's right there, or you can use a generic range bar chart with market flow. You're welcome. Good stuff, guys. Appreciate the time today in classroom. I appreciate all the questions, the trust. It's hard to post it in there sometimes, right? Keep doing it. Keep posting. Keep asking questions. Keep pushing forward. Realize that it's a marathon, not a sprint. And it's not difficult to get to where you want to be. It just takes a minute. Yep. And Ziba, I noticed that you sent a message. I'll reply to you right now. I'll go read it. And then, guys, I'll be back tomorrow morning, 9 a.m. We're going to do it again. And again, and again, and again, and again, and again. I will see you guys in the morning. Enjoy your afternoon, everybody. Are you sure, Ziba? Okay. I got you. Awesome. Take care, everybody.